Good morning. Today we learn about the chapter Bank Reconciliation Statement, which is considered to be one of the toughest unit for first year students. Let's see how this online platform can be made use of for effective learning of this complicated chapter. Before I introduce you this Bank Reconciliation Statement chapter, let me consider there are two persons. One is a trader and the other one is a banker. Now, trader deposits money to the bank, and from the bank again he withdraws money. This transactions between trader and the banker goes multiple times in a year. And the transactions, I call as a T here, transactions, which are happening between trader and the banker will be recorded by both. Trader also records it, banker also records it. The trader records in his cash book and banker also records in his ledger. The bank balance as per trader is called as bank balance as per cash book, and the bank balance as per the banker is called as a bank balance as per passbook. So there are two balances: bank balance as per cash book as per trader and bank balance as per passbook as per the banker. I hope this point is clear. Let me proceed. Now, as I explained you, the trader and the banker record the same transaction. So, obviously, money reflected in both the books must be same, right? So, as same transactions are entered into by both the persons, the two balances must be same, correct? But due to some reasons, bank balance as per cash book will not be equal to bank balance as per passbook. Since these two balances differ, it is a duty of a trader to explain why it differs. There has to be some reason, right? These reasons are to be explained through a statement called bank reconciliation statement. So the last point is that bank reconciliation statement is prepared to explain the difference between bank balance as per cash book and the bank balance as per passbook. I hope this point is clear. Now, before we do reconciliation, you must understand when a trader enters in his cash book, what is his effect? I do not read all these things. I trust pictures are worth better in explaining. Now, in this cash account, when a trader passes an entry on the debit side, the bank balance increases. Bank balance will go up. So second point is that if a trader passes any entry on the credit side, bank balance comes down. So there is only two effects. Increase in the bank balance and decrease in the bank balance happens when you enter on the debit side and the credit side. I hope this effect is clear. This is as per trader. Now let me go to the passbook. In the passbook is from another person, that is banker. Obviously, the transaction comes on an opposite side. So effect is opposite in passbook. So if you see this slide in the previous slide, here this is as per passbook. What is the effect? If when a banker passes any entry on the debit side of the passbook, bank balance comes down. and any entry made on the credit side of the passbook, bank balance increases. Or the effects of entries on in passbook. So there are two effects. What happens when entries are made in cash book? What happens when entries are made in passbook? I would like to summarize in my next slide. Now, in this, before we go analyzing, so we have a few points here to discuss. Point number 1, point number 2, and point number 3, and point number 4. Before you do reconciliation, what is your job is you have to analyze in which book the entry was made first. That means whether it was done in a cash book or done in a passbook. A student has to understand. After identifying in which book the first entry was made, you have to be thorough the second point. Second point, you have to analyze it was made on which side, whether on the debit side or on the credit side. You must be able to identify. After analyzing the side, you must know what is the effect of the entry on the bank balance. That means whether bank balance increases or bank balance decreases, or the effects. So first understand in which book it was entered first, then understand it was entered on which side, then analyze what is the effect. Now from the previous lesson or 2 slides, let me sum up that in cash book and passbook, the effect goes like this. On the passbook debit balance, if an entry is made on the debit side of the cash book, bank balance will, what happens, increases. If you pass an entry on the credit side, bank balance decreases. But the effect is opposite in case of a passbook, as I explained you. In case of passbook, there are two sides, debit and credit. Entry made on the debit side, bank balance decreases. If an entry made on the credit side, bank balance increases. And you can see that effect is opposite here. And similarly, effect is opposite here. So this diagram you have to memorize. What is the effect of entries made in cash book and passbook? Once you do this much of ground operation on the chapter, you're almost ready to solve the problem and you need one more tip. Now, after analyzing in which book it is made, on which side it is made, on what is the effect, once you understand, then you have to go for reconciliation. Now, we know there are two bank balances. One is the bank balance as per cash book, other one is the bank balance as per passbook. Now, one of these two, either one or two, one of these two should be taken as a starting point. Bank reconciliation will have 2 points. One is the starting point and one is the end point. So if you take BB, CB as a starting point, then BB, PB will be end point. Vice versa. If you take BB, PB as a starting point, then BBCB will be end point. So this students will have an option to select, or an examination question might ask you to follow a particular book as a starting point. If nothing is given, it's your choice. So you can select either BBCB or BBPB can be taken as a starting point. So I got an idea. First analyze in which book it was made. Second point, you had to analyze it was made on which side of the cash book or the passbook. Then you have to understand what is the effect on the bank balance. Bank balance goes up or comes down. Then you have to memorize the diagram of increase or decrease. After that, the fourth point is you have to select, fifth point is you have to select the starting point, either BBCB or BBPB. Now, after selecting the starting point, then we have a rule. Let's see what is the rule. Now, We have 2 points as I said. One is starting point, other one is the end point. What is the rule? Rule is that if the starting point is more, that means if due to that reason, if the starting point balance increases or end point balance comes down, if one of these two happens, then you had to subtract that reason. This is the rule of addition and subtraction. This is the heart of the chapter. On the other hand, due to that reason, if starting point comes down or R, end point goes up, then you have to add the reason. So there are only two things you have to do. One is a subtraction, other one is a addition. Now let me study this with the help of the statements given here. I'll erase this so that I can write it once again after reading each sentence given there. I hope students are following. Okay, now what I said in the first sentence, if starting point is more, starting point increases or the end point decreases. If any of these two happens, then you have to subtract that value, you have to subtract that reason. Or if the starting point is less or end point is more, then you have to add the difference. This is the next point to be remembered, how to add and subtract. If you memorize all the previous 3 slides, I'll repeat. 1. Identify the book. 2. Identify on which side the entry was made. 3. Understand the effect of that entry, whether bank balance increases or decreases. 4. Remember the diagram of the increase or decrease in the bank balance. And the 6th point is you have to know the rule of addition and rule of subtraction. Once you master this rule of increase and addition and subtraction, then a student is fit to do his reconciliation. Now let's go for a problem. Value has been omitted. 1 minute. On page 3000. Okay. Now here is a question. Let's study. Bank balance of a trader on 31st December 20 is 12,000. So this is as per cash book. So this balance is called BBCB, bank balance as per cash book. But on the same day, passbook balance was 15,700. This is BBPB. So there is a difference. When I compared my passbook with my cash balance, I found two reasons. Reason number A. Check issued on 15/12/20 was presented in passbook on 2/1/21. There are two dates, 15/12, 2/1/21. But I am preparing my BRS on 31st December 20. That is a middle date. Hence, what happens later is not important to me. So hence 15/12 is important. On 15/12, check was issued. And the second reason is that interest credit in passbook is 700. So this is the second transaction. Now there are two reasons. One is check issued on 15/12 but came to passbook on 2/1. And the second one is interest was recorded in passbook as 700 that was not found in a cash book. So this is found in one book and not in the other. By taking these two reasons, let's see how to analyze and solve it. Now, first reason, this is very important. This analysis you have to do mentally for each and every adjustment. Now, the first reason is check issued on 15/12/20 was presented on passbook on 2/1. I told you 2/1 is not important for us. It comes after 31st December. So now it is check issued on 15/12. When I say it is issued, who issued? It's a trader. Trader maintains which book? Cash book. So analysis is in which book it was entered first. It was entered in the cash book. It was entered on which side? It was entered on the credit side because money comes down. What is the effect when entry is made on the credit side? The effect is cash by BBCB decreases. So this is analysis. Similarly, let's go for second analysis. Interest credited in passbook. You are given here a clue. Credited in which book? Passbook. So the first point you have to analyze. It was entered in which book? Passbook. On which side? On credit side. What is the effect if the money is entered on the credit side of the passbook? Bank balance increases. So this is analysis. When you analyze this much, then you have to apply the rule. What is the rule? If starting point is more, this is the end point. This should be. If the end point is less, then you have to subtract the reason. If starting point is less or end point is more, then you have to add the reason. Let's apply this rule for this analysis. Now, we are given BBCB is my starting point. It is 12,000. As BBCB is starting point, my BBPB is my end point. Now, what is your job is from this analysis, you have to identify the effect is on starting point or on the end point, then apply the rule of addition and subtraction. Let's analyze. First one, check issued. We analyzed already. Once again, I'm repeating. Check issued was entered in cash book. On the credit side, bank balance has come down. In which book? In cash book, it has come down. Cash book is my starting point. Starting point is less. As the starting point is less, what you have to do? You have to add the reason. So check issued 3000 must be added. Then let's go for the second one, interest. Interest was entered in which book? Passbook. On which side? Credit side. What is the effect? Bank balance increases. In which book? Passbook. Passbook is the starting point or the end point? It's the end point. In end point, the bank balance increases. So if the end point increases, see the diagram what to do. If the end point increases, then you have to add the difference, add the reason. So add the interest, 700. 12,000 plus 3,000 plus 700 gives you the bank balance as per passbook 15,700. It's so simple to reconcile provided you know the following rules. What are they? Let's see what reasons are required for you. Yes. So this is how we do reconciliation of bank balance as per cash book and the bank balance as per passbook. What is more important is the analysis. And join me to learn in the same manner effectively many more things on accounts and statistics. Thank you very much for watching this video.